Ever wondered what different types of shares exist and how they can impact your investment strategy? Well, imagine shares as golden tickets to the magical world of corporate ownership. That's right. When you buy shares, you're essentially buying a piece of a company. Now, these shares come in different flavors, each with their own unique characteristics and benefits. The two main types are like the sun and the moon of the investment universe: common shares and preferred shares. Common shares are like the sun, often shining bright with potential for high returns. Preferred shares, on the other hand, are like the moon, providing a steady and predictable glow in your investment portfolio. But remember, each type of share is unique and offers different prospects for growth or stability. The key is to understand these differences and how they align with your personal investment goals. Now, let's delve deeper and understand what these types of shares really mean for you as an investor. Common shares, as the name suggests, are the most common type of shares that investors buy. But what are they exactly? Well, when you purchase common shares, you're essentially buying a piece of the company. This gives you a say in how the company is managed, thanks to the voting rights that come with these shares. Common shares also offer the potential for high returns. You see, as the company grows and prospers, so too does the value of your shares. This increase in value is what we call capital gains. Plus, you may also receive dividends, a kind of profit sharing where a portion of the company's earnings is distributed to shareholders. Now, it's not all rosy. With common shares, you're also taking on a certain level of risk. For example, if the company doesn't perform well, the value of your shares could decrease. And in the worst-case scenario, if the company goes bankrupt, common shareholders are the last in line to receive any remaining assets. This means you could potentially lose your entire investment. Moreover, the payment of dividends is not guaranteed. It's at the discretion of the company and may change based on its financial performance. So, while common shares can offer considerable returns, they also come with a higher risk. Now, what if you're a more conservative investor? That's where preferred shares come in. Preferred shares, often the choice of conservative investors, come with their own unique set of characteristics. Think of these shares as a blend of stocks and bonds. They exhibit traits of both, bringing together the best of two worlds. Now, you might be wondering what makes these shares so preferred. Well, they offer a fixed dividend. This is a slice of the company's profits paid out to shareholders periodically. The beauty of preferred shares is that these dividends must be paid before a single penny is given to common shareholders. This offers a layer of protection, a safety net if you will, that can be mighty appealing in times of economic uncertainty. But as with all investments, preferred shares come with their own set of drawbacks. The most notable of these is that preferred shareholders generally do not have voting rights. This means that they don't have a say in the company's decisions or its direction. They're essentially silent partners, reaping the rewards but having no input on the journey. So if you're looking for a steady stream of income and aren't too bothered about having a say in the company's affairs, preferred shares might just be your cup of tea. Preferred shares can be a safer bet for those seeking steady income and less risk. But remember, less risk often means less potential for high returns. So we've talked about common and preferred shares, but what does this mean for you as an investor? In essence, common shares offer the potential for higher returns, but with a higher risk. They give you voting rights in the company and the chance to participate in the company's success through dividends and capital appreciation. On the other hand, preferred shares are more stable, offering a fixed dividend and are less risky. The catch? Their growth potential is comparatively lower. The type of shares you opt for should align with your investment goals and risk tolerance. If you have an aggressive growth target, you may lean more towards common shares. If your goal is to have a steady income stream with less risk, then preferred shares could be your cup of tea. Remember, the type of shares you choose can greatly impact your investment strategy. So make sure to do your homework before diving in. Happy investing!